I want to talk to you about your stewardship when it comes to building a business, right? Especially for you, you're either in the startup phase, I call startup phase year 1 to 4, or some of you might have been in business a lot more than 4 years, but it hasn't really grown. I want to talk to kind of that group now and kind of go, okay, well, how do we manage this? Let me draw you a little bit of an equation, right? So you have in your business right now some revenue, right? Top line revenue. So now I'm just assuming that it's enough that it's enough to count. Some money is coming in, okay? Let's say, I don't want to get too bogged down in some minor details. I want you to conceptually see the plan here, right? But you've got some revenue, whether that be $10,000 a year because it's a hobby business, or whether it be $10,000 a month because you've replaced your job, or whether it's $10,000 a day, whatever the business is. You've got some revenue coming in. And then out of that revenue, you don't get to keep it all, right? Unfortunately. So then what happens is you end up with free cash flow. So that's another word for profits, basically. So two types of cash flow, right? There's cash flow and free cash flow. Cash flow is the money comes in. Free cash flow is the bit you get to keep. It's the profitability. But maybe not like a profit and loss statement, because profit and loss statement doesn't tell you, balance sheet expenses are not on a profit and loss. So a profit and loss may show a paper profit, but it actually may not be that because you've had interest and leases and stuff like that on the back end. But we're talking here about the actual physical cash that comes in your business, and the actual physical cash that you get to keep at the end of the month or week. Any real time frame, doesn't really matter, okay? Now, what happens is we've got some free cash flow, but we don't get to keep all of that, right? We don't get to keep it all because, for example, there's some tax to be paid on these things, there are other things you've got to pay on these things. So we have a lower number, right? And we would call that our reinvestable capital. That's the amount of money that we can reinvest. So after we've got free cash flow, we've got some taxes, maybe some balance sheet expenses, and then we got some, a number down here that we can reinvest. Here's the question that we've got, right? You can spend that money on one of two things. You can spend it on your business or your lifestyle, and you get to choose. But where do most people spend it? Most people are spending it on their lifestyle and not on their business. And that's the mistake. It's a handbrake. It's going to mean you go slow. You're not going to build a huge amount of awareness. You're not going to invest in your business. And it's going to mean that you grow slower and you don't build the momentum. You don't get the exponential curve that you need to take off. Because, so from here, right, we can invest that into lifestyle or the business. Every single dollar that you take out of this equation and spend on your lifestyle is gone forever. Every dollar that comes through your business that you invest in your lifestyle is gone forever. It's a one transaction equation. In, out, gone. Every dollar that comes through here and goes back in your business multiplies. You put it back in the machine, make some more. You put it back in the machine, make some more. And that's how you build momentum. That's how you win. Now, so it doesn't matter whether you're doing 10 grand a year, 10 grand a month, 10 grand a day. It's the same equation, right? The money deployed back in your business will help you multiply the money. Every time you drive through the drive-through of a coffee shop, right, and you spend $6 on a, super large mocha, shocker, extra sprinkles and triple dollop of cream, that's $6 that you're not putting back in your business that can never multiply in the future. Every single time you buy something you don't need, a bit of clothing you don't need, go on a holiday you don't need, buy a cruise you don't need, Apple products you don't need, every time you do that, you're wasting the money. Every dollar that you put back in your business will multiply and make you money in the future. You get to choose. It's the little amounts often that make the biggest difference. You don't have to have big checks in business to redeploy them into your business for it to work. It's little bits often. Put back in. For example, just an example. Facebook right now is about $12 per 1,000 impressions for running ads on Facebook. Every time you spend $12 on your lifestyle, you could have had 1,000 more people see your message. Which do you need right now? If you're building a business, build a business. Every dollar that you take out, I don't mind if you take dollars for your lifestyle, as long as you start to have the conversation of, what do I need right now? Because this money's gone forever. If I redeploy it in the business, I'll have more money in the future. I can buy that thing and have more money. You get to choose, right? It is a daily walk. But at the end of the day, there's only so much money that's coming out of your business right now. You're either going to, spend it on lifestyle or invest it in your business. And the little amounts often will be the compound effect that will buy you the more customers to get the more money, to buy the more customers, to get the more money, to buy the more customers. And then at some point you'll blow up and you'll put a team around you. They'll make you money. Then you can have the lifestyle that you want. But in the first few years or in that real momentum stage, you need to redeploy as much money back in the business as you can. The little bits really matter.